Solana, Sol Potential in 2022. This is you need to know. Many people believe Solana to be Ethereum's main rival. This is primarily due to its unrivaled speed and substantial institutional backing. However, over the last few months, Solana has had its fair share of network troubles and Sol has fallen far from its all-time high. Many people are asking if Solana's sunny days are ended. Welcome back to Metaverse. For today's topic, I'll give you some background on Solana, catch you up on some of the project's most critical changes, and explain why Sol could be on the verge of a massive comeback. So buckle up and let's get started. So what is Solana? If you're unfamiliar with Solana, here's what you need to know. Solana was founded in 2017 by computer scientist Anatoly Yakovenko. Solana was built by Solana Labs and a software company based in the United States, and its development is coordinated by the Solana Foundation, a non-profit based in Switzerland. Solana raised around $25 million across various ICOs between 2017 and 2020 and raised an additional $314 million from various crypto VCs. In 2021, Solana's mainnet went live in March, technically in beta, and this is noted in the top right-hand corners of its two official block explorers. The Solana blockchain uses a novel proof-of-stake consensus mechanism that timestamps transaction using proof of history, a special verifiable delay function that's outside the scope of this video. Although the Solana blockchain has almost 1,700 validations, transactions are processed by groups of up to 150 validators called Solana clusters. Now, this relative centralization plus Solana's insanely fast block time of 400 milliseconds makes it possible for Solana to express between 45 and 65,000 transactions per second. To put things into perspective, this is about the same speed of Visa's payment network, and this makes Solana fastest cryptocurrency on the market. Solana's endgame is to be faster than centralized stock exchange like the Nasdaq, with the aim of eventually replacing them, and this is a big part of why the project is so popular amongst institutional investors. One of the biggest institutional supporters of Solana has been the FTX exchange, which uses Solana as its de facto exchange chain and has poured tens of millions of dollars into its ecosystem. Solana is also the official chain for the USDC stablecoin, though around 90% of USDC supply currently exists on Ethereum. Like Ethereum, Solana is smart contract compatible as such as it 100 of centralized application, and its D5 protocols currently have around $5 billion in total value locked according to DeFi Llama. Solana also has a sizable NFT scene which should hit 2 billion in trading volume by the time this video hits the tube. This makes Solana the third most active NFT blockchain by trading volume after Ethereum and Axie Infinity's Ronin sidechain. According to the Crypto Slam, Solana's ecosystem can be easily assessed using the Phantom wallet, which assists and as both as the mobile app and browser extension, and has seen more than 2 million downloads. All the buzz on the Solana blockchain has made it extremely large, which could quickly compromise its decentralization, since a smaller and smaller number of validators would be able to store it in its entirety. This is why Solana store its hysterical blockchain and data using another crypto project called Rwave. Updates about Solana Part 1. The Solana blockchain was hit by another distributed denial of service or DDoS attack, which resulted in degraded performance. Solana was hit with a DDoS attack in September, as well as which actually managed to bring its blockchain down for almost an entire day. December's degraded performance marked the third time Solana's blockchain had experienced significant issues since its launch, and the first time, in case anyone's wondering, was in December 2020, was the network went down for 6 hours. A few days after last year's December outage, Solana Ventures announced the establishment of 150 million crypto gaming fund in partnership with Forte and Griffin Ventures. At the end of December, the Solana Foundation announced that the Solana blockchain had become carbon neutral thanks to the non-profit's purchase of carbon credits. Funny how that works. In early January, the bad news came back in a vengeance. The Solana blockchain experienced 2 back-to-back episodes of degraded performance, and users claim that this is developers speak for the full-on outage. They they experience on these occasions. According to the Solana status website, Solana actually had another 2 partial outages at the end of January. Though it doesn't look like the crypto media picked on these, that's probably because they marked the 4th and 5th times. The Solana blockchain had experienced issues in less than 2 months, meaning that is becoming so common that it is so no longer net worthy. Now, oddly enough, these episodes of degraded performance didn't change Bank of America's decision to declare Solana the quote Visa of crypto. In mid-January, JP Morgan also became one out of say that Ethereum was losing NFT market share to Solana because of the high transaction fees on the Ethereum blockchain. At the end of January, Coinbase listed Solana tokens on its exchange for the first time, opening on the door to more Solana tokens listing in the future. For context, Coinbase is known for frequently listing Ethereum tokens. Solana's Phantom wallet also raised a whopping $109 million from various crypto VCs, giving the company behind its valuation of over $1.2 billion. Updates about Solana Part 2. Speaking of Phantom, in early February, Solana announced the launch of Solana Pay, which will make it possible to pay for goods and services using the USDC stablecoin on Solana. Not surprisingly, Solana Pay will be integrating with Phantom and FTX, and because Solana seems to have the worst luck, a few days later, its wormhole bridge of Ethereum was hacked and more than $320 million of ETH was stolen now. If you are wondering how this happened, the hacker tricked the bridge smart contract into minting 120, locking up to any ETH on the Ethereum side, and then transfer the 120,000 ETH from the Solana side to the Ethereum side. For actual ETH, if it wasn't crazy enough, a VC firm called Jump Crypto stepped in to replenish the ETH on the Ethereum side of the wormhole bridge, in what Cointelegraph called the biggest DeFi ball-out in the history. In a follow-up interview, Jump Crypto president Khan of Korea explained that Jump's reason for stepping in was basically because it had built the wormhole bridge and was therefore obliged to do so. Now, to be exact, the wormhole bridge was built by the developers at Certain, one another crypto company, which Jump Crypto has acquired last August for the explicit purpose of building secure infrastructures. For Solana, Kanav also explained that Jump Crypto is confident that most, if not all, of stolen ETH will eventually be recovered, primarily because that amount of ETH is next to impossible to hide and therefore next to impossible to catch out. To that end, Jump Crypto is working closely with the FBI and blockchain analytics firm Chainalysis to keep track of all the ETH that was stolen so they can freeze it if and when the hacker tries to cash out. Jump Crypto is also offering $10 million bounty for people who have any information about the hacks. So yeah, give them a call if you know anything or know anyone who does. Luckily for Solana, the wormhole hack was quickly overshadowed by the release of the mobile app and Steph, a crypto project on Solana that rewards you with cryptocurrency for walking or running. Stephen's novel, Move the Earn mechanics has caused the project to explode in popularity to the point that it cracked up the top 100 cryptos by the market cap. In mid-February, the centralized streaming platforms Audius announced that the Audius token was available on Solana via the wormhole bridge. Audius also announced the launch of Audius Rewards, which will airdrop audio to users who interact with the Audience app. Updates about Solana Part 3. Anyways, in mid-March, the Coinbase wallet added support for Solana and Solana tokens, something which was arguably long overdue. In any case, it adds credence to the idea that Coinbase will start listing Solana tokens more frequently. Solana also announced that Solana Pay had successfully onboarded 600 merchants in its first 2 months of operation, which is not too shabby. FTX and CoinShares even partnered to create a physically backed stacked Solana ETP, which listed on a German stock exchange. And the end of March, Wisdom Tree launched physically backed ETPs for Solana, Cardano, and Polkadot on stock exchange in Switzerland and Germany. Grayscale also announced the launch of a smart contract cryptocurrency trust consisting of Ethereum alternatives, which Sol, as the largest position innovation in the trust as the cherry on top. Ethereum NFT marketplace OpenSea officially announced it would be launching on Solana, and the integration was completed earlier this month. Then another Solana headline from earlier this month was the Chicago Mercantile Exchange's announcements that it was looking at offering features for Solana at Cardano. For those who don't know about Chicago Mercantile Exchange, or CME, is a feature exchange that used almost exclusively by institutional investors, and only two cryptocurrencies it currently offers features product that are Bitcoin and Ethereum. SOL price analysis and potential. Anyhow, as amazing as Solana's updates, developments, announces, and partnerships has been, Sol's price has been struggling over the last few months. This is for a few reasons. For starters, Sol is an altcoin. That means that the price action is highly correlated with the BTCs. As you've probably noticed by now, Bitcoin has been having a hard time since December 2. One thing that Bitcoin hasn't had, however, is an endless stream of bad press and constant network outages. And the wormhole hack put a dent on the Solana's perceived reliability and likely resulted in many users and investors turning their focus on other Ethereum alternatives. Near Protocol appears to have been the primary recipient of this users and investors, which makes sense given that it seems to be Solana's primary competitor. Their blockchains have similar architectures. They use the same programming language. The software companies which built them are based in the same area, and they've backed the same crypto VCEs. In addition to these two factors, Sol's circulating supply has increased by between 20 and 22 million, according to the CoinGecko and CoinMarketCap respectively. Assuming an average price of around 100 per Sol, this works out to over $2 billion of potential sell pressure. And assuming all the Sol was sold, of course, the good news is that Sol seems to have no shortage of demand drivers to absorb all this selling if it did in fact occur, and not just from users or retail investors. There are over half a dozen different institutional investments vehicles for Sol, and we can tell they've been sent and a decent amount of inflows since December despite Sol's poor price action. In a good example, here is Grayscale's Solana's Trust, which had around $10 million in assets under management when it launched, and at the end of November today, Grayscale Solana Trust still has around $10 million in assets under management, even though Sol's price fell by 50%, which logistically means that it is the total amount of Sol held by the trust has essentially doubled over the last 4 months. On the retail side, OpenSea recent launch on Solana seems to have resulted in an uptick in user utility demand. For Sols, one can assume that this is the case given that the total value locked on Solana's DeFi protocols continued to decline during the Sol's recent rally. However, Sol's massive market cap means it doesn't have much wiggle room to move to upside in percentage terms. That said, Sol's price remain in a long-term uptrend, and it's one of the few cryptocurrencies that will almost certainly retest its previous all-time highs when the bulls really come back to town. Solana roadmap. Whether Sol manages to set new all-time highs ultimately depends on Solana's upcoming milestones. The first of these involves a Solana project called Neon, which is building a smart contract layer for Solana and that leverage the Ethereum virtual machine. Now, I haven't actually heard of Neon until crypto journalist Laura Sheen interviewed Anatoly last November. She said that some pretty spicy questions which we'll come back to later. According to the Neon's website, its implementation of the VVM will be able to process 4,500 transactions per second, which would make Solana the fastest EVM-compatible cryptocurrency on the market. The smart contract cryptocurrencies that leverage the EVM have an easier time acquiring developers and users, especially when Ethereum gas fees are high. Solana's Neon layer is expected to launch by the end of June, and when it does, Solana could start to take some serious market share from both Ethereum and other EVM-compatible cryptocurrencies like Avalanche. In plain English, SOL will pump. The second Solana milestone involves Circle, the company that issues the USDC USD stablecoin Circle. CEO Jeremy Allaire mentioned in February interview that Circle is in the process of developing a centralized digital ID protocol, which will presumably exist on Solana, given that it's USDC official blockchain. In theory, this would make institutions more comfortable investing in Solana and its projects and its investments that Solana's Magic Eden NFT marketplace saw after it implemented. KYC supports this theory. Let's just hope that they don't get too carried away with the whole digital identity stuff. The third Solana milestone involved the Solana Foundation. In an interview last month, members of the Solana Foundation explained that they focus on increasing Solana's adoption outside of the United States. The Solana Foundation is also working hard to onboard as many validators as possible and is using its massive treasury to bootstrap validators and stacking pools. One Solana Foundation member made a passing comment that caught my ear, and that's that Solana is still intending on adding support for the Cosmos Inter-Blockchain Communication Protocol, or IBC. There's another milestone that might be on Solana's roadmap, and that's it's vying to become the blockchain for the de facto central bank digital cryptocurrency and United States, which will probably the USDC. It's an idea that was originally floated by multimillionaire investor Kevin O'Leary. During the Bitcoin conference in Miami, in short, Kevin said that the Federal Reserve isn't going to be writing code anytime soon, and that the United States doesn't need a digital dollar issued by the Fed because it already had a digital dollar issued by Circle, which is again USDC. Kevin believes that upcoming stablecoin regulations will turn USDC and other stablecoins like Paxos USDP into the de facto central bank digital currencies. Solana concerns. Solana isn't nearly as secure as institutions want it to be, and this is something that Anatoly admitted in a recent interview with Jeremy Allaire. This is obviously a concern because the implication is that, well, Solana nearly as secure as institution want it to be, as if the network issues continue, then it could lose ground to more secure competitors. This ties into the second concern about Solana, and that's centralization. In that aforementioned November interview with Laura Sheen, Anatoly admitted that the Solana blockchain currently has a single service provider. This means that all the Solana's validator nodes are using the same service to interact with the Solana blockchain. Now, to be fair, this is not all that dissimilar from the how many elements of Ethereum used in Furia to interact with the Ethereum blockchain. There's a possibility that Solana has already addressed this issue, or is that at least working on addressing it. My concern, though, is that Solana seems to be having a hard time onboarding both developers and validators, and this is something that Anatoly and members of Solana Foundation have admitted. Case in point, Anatoly says that building on Solana is like a coat eating glass, and though he says it is a joke, Solana's development hurdles are clearly limiting to the project's growth potential, and that is no launching matter. As for validators, it sounds like the hardware requirements are insanely high, which makes sense when you're dealing with a blockchain that moves so damn fast. However, this also presents centralization risk, especially if the hardware requirements increase as Solana becomes more developed on the node. Maybe Solana's speed depends on the number of Solana's clusters, and this means that Solana is going to need a lot more validators to scale to its theoretical maximum and beyond. For what it's worth, Solana has no shortage of financial firepower to address these issues, and the fact that institutions have continued to invest in Sol and support the project despite these issues is proof that Solana has a serious potential. So, what are your thoughts about this topic? Do you think this video is useful? Please let me know by leaving a comment down below, and if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to our channel for more videos like this. Thank you for stopping by to watch. See you on our next video.